We are delighted to be joined by the Chairman and CEO of Morgan Stanley, James Gorman. James, thanks for having us. And
sure. Thank you.
There's so much to talk about today, including your excellent 2017 results and the market volatility. But let's start with the reason we're here, specifically the Executive Women's Conference. What does this conference, which is the 10th year of it, really achieve for your female executives? And are you content today where you stand with the balance between male and female executives at Morgan Stanley?
Well, the conference itself is actually external. We invite several hundred leading executive women from companies around the country to come here to share ideas, to talk about the markets, talk about the kinds of business challenges you have as CEOs or C-suite officers, and give those folks a chance to network. We're obviously, we have a lot of our senior female executives here as well, and it works really well. We've done it 10 years, and it's all part of Morgan Stanley's effort to improve our diversity outreach, both with our client base and internally.
And as we sit here internally, we're at a stage where gender equality is at the forefront of people's minds, perhaps more than it has been for a while. So much so that some governments, like the UK, have legislated to force companies like yourself to publish their raw data of pay between men and women, which you'll have to do for your UK employees by exposed in the US as well.
Sure, I don't have a problem with the transparency. I mean, the facts are the facts. And all of us in management are trying to improve the diversity across the organization. I think, honestly, we've started looking at those numbers and they'll be published over the next couple of weeks. They're fine. That's not the issue. The issue is, what does it take to increase the number of women moving into senior executive, managing director roles across the firm, leadership roles, and how do we do that? And it takes a long time to groom folks, so you can't just flip a switch and be done. This year, 25% of our new managing directors were women. Is that enough? No, it's not. It's not where we want to be, but we're making progress.
Let's switch focus and talk a little bit about the markets. We've seen a sell-off again over the last week, including today, largely because we've seen tariffs imposed by the president on steel and aluminum imports from around the rest of the world. We expect to get that signed tomorrow now, is the latest reporting. What was your take when you heard the news of those tariffs?
Well, firstly, the markets have been screaming for turmoil, right? We've needed volatility. So the fact we're having some in the last several weeks has not bothered me at all. Tariffs, I thought it was a bad idea. I mean, to be blunt, the biggest issues this country faces are not trade deficits; they're fiscal deficits. And I think what we need to be doing is focusing on the real issues here. And listen, you can always enter into a trade war. But doing it with allies, doing it with countries that we sell a lot of goods to, that's not necessarily the best way to move forward. So I was not a fan of this. I'm a global, I believe in globalization. I think it's helped the U.S. economy, and hopefully it will be moderated over the next 24 hours.
You mentioned allies were included in this. Do you fear retaliation from them or others?
I think there's going to be, Wilfred. I mean, you can't be unilateral in these things. The world is, for all the concern about the level of importing that we're doing. Look at the exports. We're in a net surplus on services, fastest growing part of the economy. We're in net deficit on certain goods in certain sectors. So, I try and take the bigger picture. And sure, if people can't pick and choose. Once you've put in some tariffs, they will respond, whether they're friend or foe.
Does that undo the good work the administration has done on the economy? Does it outweigh it?
I don't think so. No, I don't think so. I think, the economy is obviously doing well. We saw the ADP job numbers this morning, I think, were 230,000 and change. The economy's doing. We're going to have a 3-handle on unemployment. What we need is some wage inflation. We need a broader part of the population to participate in this economic growth that's going on at the moment. So no, I don't. Do the trade wars specifically, do they undermine it? No, but do they create a level of uncertainty unnecessarily in the market? They do.
What do you think about Gary Cohn's departure? Clearly he was a member of the economic team that opposed this sort of protectionist measure. Are you worried that he's no longer there?
Gary's a very talented guy, a good guy. There are a lot of talented people in this country. So specifically, do I worry that if you pull one person out of the team, No, I don't. That's not really the issue. And, you know, if you'd listened to the president's campaign speeches, you knew that this was coming. This can't be a surprise to anybody. It's just a question of how broadly based it was, and it's obviously relatively narrow at the moment. So no, I'm not particularly fazed by that.
Gary's a free agent now. Would you be looking to hire him, and perhaps it would help you take on his former employees, your big rivals, Goldman Sachs?
No. I like Gary, but no, I'm very comfortable with our team. Thank you very much.
Fair enough. Let's talk a little bit about markets. I mean, I'm interested, you said it at the top there, that you really weren't worried at all about the volatility. I mean, there's various headwinds, whether it's rising rates or protectionism. You're not concerned about another big correction like we had recently?
You know, you've got to put it in context. We're dealing with global markets. Rates are rising. Commodities have recovered after a very difficult period. The equity markets are expensive. I don't think they're ridiculous. I think they're expensive. You've got global synchronized growth going on at the moment, very low inflation. The US and Europe and then Japan will all start moving to a normalization monetary policy. You've got to expect some volatility with this. With the VIX was under 10 for a significant period of time. That was unnatural. We're at an unnaturally passive ebb for a period of time. Now, do I care on a week-to-week basis? Not really. Does it matter what the stimulus is for that volatility? Not particularly. What matters is long-term economic policy, and I get back to fiscal restraint.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.